Obviously, some tough sledding here in the early going. Sectors are mixed. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Flat open, essentially, here, but a word that Biden's willing to compromise on the corporate tax rate. That's getting a lot of play on trading desks. I think people realizing we're not going to see some of these big increases in taxes. We'll see some, but not anything near what the original proposals were. You see the trend here. The bias is once again towards the reopening plays. So materials, industrials, energy doing well. This is really the story for the second quarter. Ever since start of April, these have tended to outperform. Tech has tended to underperform. In fact, let me just show you how the sectors are doing since the start of the quarter. Now, this is April 1st, the start of the second quarter I'm talking about. And you see the bias towards the reopening here with materials, energy, banks outperforming, communication services doing well. But tech, with the S&P up about 5% for the quarter, the second quarter, tech is the laggard here, up about 2%. And, of course, a lot of the more speculative tech aspects, particularly thematic tech, Cathie Wood stuff, are down on the quarter, rather notably. As for the S&P, very narrow trading range since we started earnings season about 3 weeks ago, maybe April 23rd. You can work around there. We were about 4170, 3 weeks ago? We're about 4170 today. So all the gains this year have essentially occurred in the middle of March to the middle of April. And once the earnings season start, we've essentially moved sideways. A real testimony to the idea that the market anticipated these fabulous earnings, even the blowout earnings we're seeing 20% above expectations, and still having a hard time moving forward. I think that's going to be an issue for the third and fourth quarter. So today, big story is Gary Gensler is testifying in front of the House Financial Services Committee. This is the third hearing on GameStop, but it's his first hearing as the head of the SEC. The testimony is out already. Not surprisingly, he's addressing gamification of trading, payment for order flow, and has a big discussion about this, whether broker-dealers have conflicts of interest, whether encouraging more trading, the more trades happen, the more they get paid. Is there a conflict there? Disclosure of short positions. You don't have to disclose short positions, unlike you have to disclose long positions. Should people do that? And that's a big debate. You're going to hear a lot about that. And he does address the Archegos fallout to a certain extent, talking about whether there is a need for more regulation of swaps. I'll tell you what I find interesting about the written testimony. There is no specific recommendations. It doesn't say, I am going to do this. What he does say time after time is, I am asking my staff for recommendations on what we ought to be doing. And at the end, he says he's going to publish a report of market events over the summer. In other words, he's going to aggregate all the recommendations from his staff and publish a report. Well, this puts them on notice. The committee is now going to be expecting some kind of report from him in the middle of the summer about what exactly he's come to, what kind of conclusions he's come to. And I think some of the commentary is a little more aggressive than some people in the community had been anticipating. Finally, Carl, he mentions reviewing events for what he calls violations. Well, this tells me he's bringing in the enforcement division. These are the cops that are out there, and we may hear about some potential violations out there. Two things, Carl, didn't mention anything about ESG in there, nothing about Bitcoin as well. These are the other two big topics that are going to be front and center in his administration. Nothing in there, but Carl, I'm sure he'll be asked about it, and we'll be monitoring it.
Shepard Smith here. Thanks for watching CNBC on YouTube.